Good morning, everyone. Today is Moneyball Monday, August the 15th. Taking a look at price action, we've heard all kinds of things talking about why the market is down today. I think the market's down technically because we're all sitting at this 50% line of the prior year of motion from high to low. And you know what? I'm going to make that midline. We'll still leave it there, but we'll make it heavier so we can see it. Particularly for the year, that's very, very important. And notice where we're sitting right now. We came almost right down into this number. That's the half the year from last year. And so here we have some support action. We could have a fairly messy day. And so here's why. Upward on the weekly, both of them. Daily, both of them. They're a little extended from a 5 simple moving average. That normally says, hey, listen, we need to sort of wiggle sideways a little or dip down into it before we ride to the north again. But what's happening here with this motion, this piece right here, is the 50%, no, what is that? The 25% of the broad motion on a quarterly formation, and then this is the 50% on the year. You can see on Friday, we had this as a support zone. Now it lost it, but now trying to recover it. Traders are going to try and buy the dips because the big time frames are still giving us higher lows and higher highs. Smaller time frames showing downward pressure on both of these. So what you want to do is make sure that you are not getting involved in the middle here because the risk could be much higher. They're going to try and buy this, but there's very likely resistance up ahead, right? We've got strong, steep sloping motion, also from a momentum perspective, also from a VWAP perspective. So the bounces should give us sell zones. Here's the thing. The drop off for sell really wasn't all the way up here. So if you're thinking to yourself, hey, maybe I can buy this, you want to watch when you come into the morning. You could go to the 5-minute. I don't love the 5-minute. I think it's very tight and could give you a little bit of trouble. But if you're looking at this perspective here, this edge up above 424.50, I'll put an alert on it. That tells me if I get up above there, I might have some traders decide that they're going to push us into the upper envelopes on these formations. So that being said, it's going to be a really wiggly day and, you know, a little bit nerve-wracking in my mind. I think it's going to be quite a bit nerve-wracking. But stay alert and realize that we have a cross current. It's being attributed to a lot of things, but I do believe it's technical. And remember, big money is still fairly short. And they're going to try and fade the bounces and get in at the higher levels, but the market is clearly sitting against them right now. There is a number right around this 420, 422 area that might cause this chart to get even choppier. So we'll be watching for that on a continued fade. My thought is the bounces are going to be sell zones if we just trade these moving averages on the tighter time frames. And of course, I like the 1 hour because it gives me a pretty good shot of understanding, okay, where am I really coming into and what can I do? So good luck trading today, and I'll see you on the Benzinga Pro platform.